the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Despite elevated uncertainty, the economy is in a solid position. We expect a meaningful amount of inflation to arrive in coming months. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. The amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are. The current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments.
Fed Chair Jerome Powell on the central bank's decision to leave rates unchanged. Let's take a look at how markets are shaping up as well. Based on futures, we are pointing to a day of declines. That caution from the Federal Reserve flagging those inflation risks and the uncertainties as well, given how we are not quite sure how the U.S. is going to respond to the Israel-Iran conflict. Just an added layer of uncertainty for markets. Take a look at how commodities are faring as well, with Powell talking about the oil price spikes. We've seen Brent U.S. crude go from 65 thereabouts last week to 75 this week, still sitting below the $80 handle. Goldman sees about $10 a barrel on the geopolitical risk premium for Brent crude. Gold also catching a slight haven bid. Heidi.
Let's bring in Garfield Reynolds, who leads the Markets Live Asia coverage. And so it's interesting, we're speaking to that previous guest and saying, yes, there's sort of more certainty, as the Fed sort of flagged about the US economy. A lot of that certainty might be to the downside, though.
Yes, that is part of the concern and part of the reason why we saw stocks in the US fall into the close. So they ended the day little changed, essentially. A big part of that is the concern that A, the economy is showing some signs of strain, and B, the Fed is pretty certain that it is not going to do anything unless those signs of strain turn into a major downturn, by which case the concern is that it would be too late. So they'll do too little too late, because they have kind of lost policy flexibility to some extent. That's because we heard Chairman Powell talking just before I came on about how the strong expectation is that tariffs will lead to inflation pressures, and the Fed is far from certain that the inflation battle has been won. You also have what's going on in the Middle East as a short-term inflation driver. So that's meaning that the Fed is not interested in cutting rates in the short term unless and until you get a severe economic slowdown. And again, policy famously acts with a lag. So if these signs of strain come to pass, in the next few months, and then the Fed finds itself cutting in September, for example, the sort of area where some traders are starting to position for that to happen, the assessment is that will be too late, that the economy will already be in a severe enough downturn that the Fed's rate cuts will act to help, but they won't act to stop that downturn.
Garf, if they cut in September, is it going to be a jumbo one? And how problematic then would that be? Because last year we also saw, ahead of September's big move, there were similar warnings. The economy eventually looked like it held up okay.
Yeah, well, if they cut in September, who knows if it's a jumbo one or not. A lot would depend on how the data has evolved. If you've still got the unemployment rate at around 4%, where it's been for quite some time, then any rate cut that comes would likely be just 25 basis points. You would need something like 4.5% for them to go a jumbo cut. And if you do get a jobless rate climbing at that pace, I think then you would look for a series of cuts because that pace of job losses would be enough to have the Fed worried that the US economy is seriously rolling over, and again with that lag and so on, so they would be rushing to catch up. I think the bigger concern would be that by that stage, if they're cutting by 50 basis points, it's going to add to the fear rather than revive the hope. So stocks might well be wobbling by that stage and actually fall faster once the Fed starts to cut by large amounts, because they would be infected by this sense of panic that this is the recession that we've to some extent all been waiting for about 2 years.
Garth, thanks so much for sharing your analysis with us. Good stuff. Bloomberg's Garfield Reynolds. Now, we've also been tracking this 18-month-long takeover saga by Nippon Steel. It's now closed. Its $14 billion acquisition of U.S. Steel. Its ADRs rose in the U.S. overnight, and we'll be watching that stock in the next hour. For more on the deal, let's bring in our Tokyo Bureau Chief, Isabel Reynolds. Isabel, why has this takeover been so controversial? And I mean, we're also hearing about these financial costs likely to add up for Nippon Steel, I think to the effect of 230 billion yen following the deal.
Yes, I mean, this has been an unprecedented story in terms of a takeover deal. I mean, the first thing, of course, to make clear that it was always, commercially speaking, it was always a really good deal for US Steel in terms of price, in terms of the pledges that Nippon Steel was making about how it was going to maintain investment and maintain jobs in the US. But it did become a political hot potato in the US, as we know. The whole saga started just as we were swinging into an election cycle in the US. None of the candidates could afford to be seen as less patriotic than any of the others. So there was a lot of opposition in those terms. We saw the leadership of the main union involved in the deal was against it. And then, of course, we saw President Joe Biden opposing the deal in terms of national security. And that set off a whole sort of diplomatic issue with Japan, because Japan sees itself as one of the US's most close allies in the world. And this was sort of seen as undermining the image of that relationship. So this whole thing has been totally unprecedented. It's come to an end now. But as you mentioned, there is one thing we don't really know still, and that is, will this work out commercially speaking? I mean, there's a broad sense that it is not a good deal for Nippon Steel. We've seen shareholders last week come out and criticize it very strongly and call for the leadership of the company to step down over it. We do have some information about one of the issues, which is the golden share. Some of that was explained last night. How far the US president will have power over this company, and it is quite broad-ranging. That's very unusual for a US president to have that much power over a company. And the other issue that we don't know very much about at all at this moment is basically, where is Nippon Steel going to get all this money that it will need to invest in the company? We have Nippon Steel speaking at 10 a.m. today in Tokyo, so we're hoping to hear some more information about that at that stage.
You've alluded to some of the uncertainties. Now that we've sort of had it formalised, what could go wrong, right?
Well, exactly. I mean, the problem is if it turns out there's a lot of equity and financing involved in this, obviously that will be very dilutive for the existing shareholders. They will not be pleased at all. And of course, if the company doesn't have freedom to do what it needs to, commercially speaking, I mean, we just had Garfield talking just now about a potential recession coming up. If you're pouring money into a company that was not doing so well, how far are you going to make a commercial success of this deal? This is really a big mystery to me.
Bloomberg's Tokyo Bureau Chief Isabel Reynolds there. We are just getting some breaking news at the moment from the Chinese ambassador to the US. Xie Feng speaking in Washington at the moment. He is speaking at the US-China Business Council gala alongside the US ambassador to China, David Perdue, there as well in DC this evening. Some pretty strong lines coming through from Ambassador Xie. They say exclusionary policies will only motivate China to work harder, that protectionism is no better than, quote, drinking poison when thirsty, and saying that the benefits of US-China trade are generally balanced. And this, of course, as we continue to watch for further developments when it comes to this fragile détente that we see between the White House and Beijing when it comes to some of the principles agreed to talks in Geneva, and then over 2 days of talks in London when that relationship was looking ever more frayed, and perhaps the sort of trade truce was on the brink of falling apart. At the moment, of course, we've seen a little bit of a pause when it comes to some of these trade developments as the world and as the White House continues to focus on the escalating geopolitical situation in the Middle East. We've seen some success when it comes to the trade deal with the UK, not so much when it comes to Japan, and no further certainty as to where it's headed with China in this trade war, Avril.
Yeah, Heidi, it's interesting, right, how the ambassador is talking about how this would spur China to work harder. We've seen how the Chinese side has made advancements even in the face of US restrictions, particularly when it comes to tech. Up next, we head to the Mobile World Congress Shanghai, where GSMA joins us to discuss how AI is shaping the future of connectivity. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you the latest news in private markets whenever and wherever it happens. I'm Kriti Gupta in the south of France, and this is Bloomberg.
Let's get you to Shanghai now, where the Mobile World Congress is going into its second day. This is, of course, Asia's largest conference for mobile connectivity. Business leaders discussing the latest technology, including artificial intelligence applications. Our Chief North Asia correspondent, Steve Engel, is there and standing by with our next guest. Steve.
Yeah, hi Heidi. It's great to be back at the Mobile World Congress 2025 here in Shanghai. Of course, there's been so many different developments in the technology world since the pandemic, obviously with the introduction and the integration of AI into a number of different mobile platforms. And of course, the whole enterprise side of the mobile economy is critical in this part of the world in China. Let's bring in our guest and the host of the MWC 2025 Shanghai. That's Vivek Badranath. He is the Director General of the GSMA. Thank you so much for having us here.
It's my pleasure.
So tell me, where are we right now? I mean, so much has been made about the evolution into 5G, and that was had a high cost barrier, obviously, for operators in Europe, US, and here in China. But where are we in the evolution of really making it a value proposition to basically justify those costs?
I think what we're discovering here, and the energy since yesterday in this event shows this, with all three major operators in China so leaning in so much into 5G, is that the promise of 5G is real, and that we're on the path to roll out. So if you look at China, you've got more than a billion 5G connections already in place. The operators are all rolling out 5G standalone. They're rolling out 5G advanced. They're building more and more applications, and that's what the action is all about here in these days. And that proves that the promise of 5G, which was quite different to the promise of 4G. 4G was about bringing mobile broadband to everyone, to get smartphones in your hands that can do internet. 5G was an enterprise G, if you would like to call it that. And that meant that you have to roll out projects for it to be worth it. So you equip ports, you equip factories, you equip hospitals, and that delivers value.
How do you respond then to the criticism that there were overpromises for 5G as it relates to the cost of rollout and the licensing and, of course, the build-out of the infrastructure, where China has the scale to do it and the direction from the state-owned 3 telcos, whereas I know you've been critical of what's happening in Europe because the cost barrier has been quite high. You want to see consolidation in order to get scale there. China has scale.
I think scale matters in order to roll out these features. When you want to roll out standalone, when you want to deliver it so that factories in remote areas or ports or hospitals can benefit from the technology, that requires you to make that upfront investment. And scale helps to make upfront investments because you amortize over a broader base. And that's what we're seeing here. And I think, at least what the learning from this is that those applications exist, that they create value, that they bring benefits to users, that they bring benefits to corporates who invest. So I think the promise of 5G was not overstated, but the need to put in place the infrastructure, the enabling infrastructure to deliver on that promise is what we're on the path of.
China's been able to do that. I want to quickly talk about Europe because much of your career was based there. Your call for consolidation to help build that scale, have larger telcos, but there's also been others in Europe who are saying that creates giant monopolies where the end result and the services are not up to scratch. How would you respond to that criticism?
Look at the technological advance and the leaning into innovation that you see in this region, that you see in China, that you see in India when you have operators with more than several hundred million customers. They're able to invest, and if you look at the price structures, they have been able to bring these solutions to market in an effective way.
How many operators should Europe have ideally?
What I can say is that the average operator in Europe has 5 to 6 million customers. And here you're at 450.
What is the great opportunity and the challenge for the integration of AI? AI, large language models, the life cycle improvements are happening at such a rapid pace, where telcos are more of a legacy, utility type business. Can they keep up with the pace of innovation in AI, and how do they do that?
I think we can be very proud of what the telco industry has done on AI. The telco industry looks at this, it's a big industry with several high levels of investment. And on digital, they discovered it over time and improved their digital performance. On AI, they've been there from the beginning. If you look at AI, it's been improving technical performance, customer service performance in telcos. We have 80% of the telcos in our base who are actually already rolling out AI at scale. So I'd say AI has been adopted by telcos. So AI for telco is already a reality. We've adopted a framework on responsible AI because we're big companies with lots of customers. On the other hand, telco brings a lot to AI, and I think telco for AI is a big subject. The impact on networks, because to access a large language model, you need a device, you need a network, you need access to reach those data centers.
What are we seeing in China where there are inherent advantages to the state-owned telcos, whether it's China Telecom, China Unicom, or China Mobile, where they have the policy backing and they have the resources to build out their data centers and the infrastructure necessary to then sell those AI services, aka the data centers, to enterprises across China?
I think what's most important is the consistency of the ecosystems. People talk to each other, they collaborate. So when you look at roundtables here, it's always a telco with an enterprise providing solutions, It's true that in many geographies, telcos are able to be AI providers because they were the first to have big data centers, or because they had big data centers and infrastructure and they're close to the infrastructure. It's not the case everywhere, but what is the most important is that you work with someone on an application, because it's not about having a standalone LLM in a box and a network on the other side. It's about linking them to deliver outcomes.
What ultimately has the trade war done to your industry? You've come in as Director General in the last few months, just as the Trump administration came in. There's a lot of disruption, whether it's the handset makers, whether they need to diversify, and the supply chain issues. Obviously, chips is a big issue, and the bifurcation of the development of the next generation mobility. How do you see it in a real nutshell?
I think it's very important that we preserve what has made the strength of this industry. If you look at where this industry was 20 years ago, it would be hard not to admit that we got where we are because of our global scale, because more than 1 billion Chinese users, more than 1 billion Indian users were part of the usage base that brought the unit costs down, that gave the scale for people to invest into factories, bigger factories, on a common standard. And that's not even to mention the convenience of having one standard for global roaming. And the ability to use your phone anywhere in the world. And I think that virtue has unlocked so many opportunities for so many people in so many sectors that it would be a pity to miss it. Also, when you look at the innovation sprouting in all regions of the world on this technology, not using all those innovations to deliver the best technologies in the standards would be a massive waste for the world.
Vivek Rajanath, thanks so much for your time on Bloomberg Television and having us here at the GSMA Mobile World Congress in Shanghai. So much to talk about. We just scratched the surface, obviously, as enterprises and operators tried to unlock the potential of 5G with 5G advanced, and eventually 6G will come someday. But right now, it's unlocking value out of 5G. Back to you, Averill.
Yeah. The sky is the limit, Steve. Thanks so much. Our Chief North Asia correspondent, Stephen Engel, at the Shanghai Mobile World Congress. And as Steve was just mentioning that trade war with his guests, we're hearing some of these comments continuing from the Chinese ambassador to the U.S. as well, speaking in Washington, talking about how the U.S.-China relations are at a critical juncture. The bottom line, the ambassador says, is that U.S. tariffs on China should be removed completely, and that they hope the U.S. will be a partner, not a rival to China, despite some of that more conciliatory tones from the Chinese side. We are, of course, watching for the tariff developments between the U.S. and China. Heidi.
Yeah, everyone, to that point, at the US-China Gala that we're watching taking place in D.C. at the moment, we've heard, of course, from Ambassador Xie from China. We're now hearing from Ambassador David Perdue from the US side, saying that US businesses have become too dependent on China's suppliers. They have to rebalance the trade relationship with China, and that the trade should be based on mutual benefit, reciprocity as well. Ambassador Xie had said on sort of a hopeful tone to his remarks that he hopes that the US will be a partner, not a rival to China, that US-China relations sit at a critical juncture. This after some pretty sort of strong words earlier on saying that these tariffs by the US on China should be removed completely, that these tariffs are still, quote, unreasonably high, and that these exclusionary policies will only motivate China to work harder. Well, subscribers can watch us live and see our past interviews on our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about and join in on the conversation as well. You can send us instant messages. Check it out at TV Go. More ahead on the Asia Trade. This is Bloomberg.
You missed it on the opening trade.
What trade does is it meets a consumer demand. Consumer demand is not weakening. China supplies little over 30% of what we eat, wear, and consume. That's unlikely to change anytime soon. I think that supply will find new homes potentially, but our reliance as a global economy on Chinese manufacturing is unlikely to change fundamentally anytime soon.
Don't miss the opening trade live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Let's get you up to speed with the latest from the corporate front. Microsoft is planning to cut thousands of jobs, particularly in sales. The latest move to trim its workforce amid heavy spending on AI. The terminations follow a round of layoffs earlier in May that hit 6,000 people and fell hardest on product and engineering jobs. The May cuts largely spared customer-facing roles such as sales and marketing. Amazon is ordering some corporate employees to relocate closer to the managers and teams by moving to cities, including Seattle and Washington, D.C., and that's according to documents seen by Bloomberg. Employees have been given 30 days to make a decision and 60 days to relocate. And of course, this comes days after CEO Andy Jassy warned that he expects AI advancements to shrink the company's workforce. Heidi.
Take a look at how we're setting up for the start of the Open across major markets in just a few minutes' time. We're looking like quite a bit of downside there, certainly as we continue to wait for the further developments in the Israel-Iran conflict. We're also seeing oil taking a little bit of a backseat, copper slipping as well. Some of these concerns over the Chinese economy. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is do we have a camera or do we don't want to lose you, Emily, in all of this.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Heidi, it's about this geopolitical risk adding uncertainty to the macroeconomic backdrop and what we've heard from the Federal Reserve as well.
That's right. The Federal Reserve staying the course, talking about sort of less elevated uncertainties, but of course a lot of that certainty, on the contrary, may be quite negative when it comes to the outlook for the US economy, right? In the meantime, Avril, as you say, we're still waiting to see more certainty as to where the US is headed in terms of its involvement in this Israel-Iran conflict.
Indeed, and whether these oil price gains are filtering through as well into, what we're seeing among consumers and the costs being added on. Certainly, it's interesting in terms of market performance that we're seeing some resilience in Asia stocks for much of this week, right? 3 sessions of gains in Japan as well, despite yesterday starting the day on the back foot. It's interesting because it might also speak to this rotation away from U.S. assets and into what we're seeing in Asia. We're seeing Japanese equities starting a bit soft. The dollar has been climbing for a lot of the days this week, but that also looks fragile. It is a climb that is almost for all the wrong reasons. Still sitting at 145 on dollar yen, and we're not seeing that much of a move when it comes to JGBs. For the board, take a look at South Korean assets as well. Similar picture emerged yesterday where they managed to kind of clock these gains by the end of the session, seeing perhaps an extension of the gains, a bit of optimism surrounding the AI complex as well when it comes to stocks in South Korea. 13.75 is where we're seeing dollar Korea won. Heidi.
Take a look at how we're setting up when it comes to that staggered start to trading here in Australia. We're not seeing much of a movement there when it comes to just the first minute or so. Of course, it is a staggered open, so we'll give that a little bit of time to sort of get started. The Aussie dollar at the moment also holding pretty steady above that 65 US dollar level. The sort of trajectory forward when it comes to the greenback also looks quite fragile at the moment. Treasuries, the rally sort of had a little bit of a stoppage, the recovery rebound, if you will, on the sentiment that we've had from Chair Powell and the Fed as well. There is a sense that these markets are sort of treading water at the moment as we wait for further developments, both in terms of geopolitics and more certainty from central banks. But certainly when it comes to the Fed, Avril, Chair Powell at the moment kind of staying the course for now.
Indeed, these Fed officials continuing to pencil in 2 rate cuts in 2025, saying uncertainty over the economic outlook has peaked but remains elevated.